Guys, welcome. Jason, I'll start off with you. It does seem that a lot of Disney's valuation is built on the notion of the streaming business, and that's exactly where the concern is. Can Disney actually deliver on the very ambitious forecast it has for its streaming business when it comes to subscribers?
Well, it's funny you say that. I think there's nothing in Disney's valuation that is tethered to the
really?
streaming business today. No,
okay.
I mean, look, I think when Netflix ran into problems, starting in the fourth quarter of last year and the first quarter of this year, the street just lost confidence in the streaming business and said, look, if the market leader with 200 plus million subs doesn't generate cash flow, we're not convinced that this business has any value. And so all of the sum of the parts math that people were doing with Disney just reverted to a pure PE story. And that's where I think we are at Disney. And so we're in this ironic situation now where, paradoxically, Disney shareholders should be rooting for Netflix, right? Because the more confidence that the street gets that there's actually a business here in streaming video, that value will ultimately cause the buy side to go back to doing some of the parts on Disney.
So let me get this straight then. So if Disney came out tonight, Jason, and said, we're not going to make 230 to 260 million subscribers by 2024 and reset that lower, that wouldn't really impact the stock too much because there's nothing left in the valuation based on streaming?
I mean, look, tactically that day, the stock could go down. I'm just telling you, if you look at the move, the $100 nominally degradation in the equity value, that is an unwinding of the streaming business. So I'm sure there's a little bit of value in the streaming business. And yes, on the margin, some investor will be disappointed if they walk back their sub-targets. But the big picture is the street isn't convinced that streaming video is a real business.
Cynthia, would you agree with that? That it's not being viewed as a streaming company, that's not Chapek's biggest thing right now?
I mean, I think that certainly, we have heard nothing but streaming coming out of Disney for now going on 5 years. So I think that, as Jason says, I think, boy, if they come out today and say that the stock would take a real hit. I think in the bigger picture, the question, though, the big question that is really going to be the challenge for CEO Bob Chapek is to talk exactly about that total addressable market question. A few years ago, even a year ago, people were talking about for a broad entertainment service, the target could be 1 billion consumers worldwide. That's a big number that set a lot of Hollywood on a chase to build these streaming platforms. If that real global number is realistically, if Netflix's example shows that real global number is realistically somewhere more at 250 million, perhaps 300 million, that's a very different business, and people have to recalibrate. I think investors are going to want to hear from Bob Chapek. What does he see? What trends are they seeing in all the different markets where they have business? Disney has a lot of benefit. They can see, they have pockets in so many places. They can feel what's going on in the domestic economy, the global economy. So I respectfully think that the laser focus will be on streaming. And I think there'll be a lot of interest in how the domestic North American sales for Disney Plus and ESPN Plus are going. I think there's a lot of focus there because the ARPU is so much greater in the US. I think those are going to be the real hardcore things that Chapek has to answer in a couple of hours.